Did you know that whole life insurance is an extremely powerful asset that can be utilized before retirement and then also in retirement? The cool part is it solves different problems at different times in your life. So for this video, I'm gonna go through all the ways that you can utilize whole life insurance before retirement, as you're nearing retirement, and ultimately in retirement and as you pass on to the next generation. So before I get into this, make sure you subscribe, hit the bell, that way you're notified every time I launch a new video. I'm launching videos like this every single day. Let's get into it. Hey, what's going on, Cashflow hackers? It's Chris with Life 180. For this video, we're talking about the power of whole life insurance, how it can work for you before you retire, how it can work for you as you're nearing retirement, and ultimately while you're in retirement. What are the different ways that you can utilize whole life insurance in your life at all these different stages to benefit you and help you reach your goals faster, help protect you, help you live the life that you want to live. I know that sounds like a bold statement to have all this stuff being done for you in one simple product, especially with a product that doesn't have that much hype and it's very straightforward and no risk in it and all this stuff. So it maybe sounds too good to be true, but I'm telling you right now, we're going to get into this and it will make a lot of sense. So without further ado, let me just do this. I'm going to put my chair up there and let's just get into this. So pre-retirement. Let's talk about pre-retirement. I talk about this a lot because I think it's one of the most important things for people to understand. Before you're in retirement, as you're building your family, maybe you're starting your family, even before you start your family, this is an important area to consider. The first thing that we need to do, I always kind of say, if you want to be a good investor, you need to save before you invest, and you need to save with the intention of investing. And when you invest, you need to invest for cash flow. The only way to do that is by first and foremost setting up your financial structure properly and making sure that you have an emergency fund in place. I'm a big believer that we need to have 2 years of safe money, 2 years of our income in safe money for emergency and opportunity. So that's the other way I got down here. I jumped ahead of myself. An opportunity fund, which is what we would call infinite banking. Now, I know I utilize infinite banking a lot. We talk about the infinite banking term a lot. That's a marketing term utilized for leveraging a properly designed whole life insurance contract. Now, I think what I really want to impress on people for this is that this concept of infinite banking here only gets implemented once you have the emergency fund checked off, right? Like, you cannot implement private banking or infinite banking or cash flow banking until you have your financial foundation set, which is your emergency fund. So I say people should have 2 years of income in an account like this, in a properly designed whole life insurance contract, because of the fact that one of those years is for an emergency fund, because the average time it takes for somebody to find a job is 1 month for every $10,000 of income. And so if you're earning $100,000 a year, then you need to make sure that you have 10 months of income, and that's average, right? And you know what it comes down to is, I guess, if you make less, you don't need quite as much. You take that, do what you want with it. At the end of the day, having more money than you think you need in emergency fund is just going to protect you. And if you have too much, use it for an opportunity fund, use it for private banking, whatever you want to do. That's a great thing. Now, protecting your family, obviously a big deal. I've had a lot of conversations lately, and it's crazy when you start having these conversations with people and it becomes a regular occurrence. You know, people are reaching out and they're trying to get insurance, and I connect them with my team. And the common story that's been happening over the past month, maybe month and a half, is people who are wanting insurance that can't get it. People that had term insurance and it's expiring, now they're having health issues and they don't qualify for insurance anymore, and they have kids, or maybe their kids are gone, but they have a spouse that they want to take care of, or they have debt that, you know, now that they're not qualifying, that their family is completely exposed and at risk, and they followed the Dave Ramsey plan of just buying term and investing the difference, but now they don't have enough invested because they didn't have a structured enough plan to do it. And then even if they did, their need for having the insurance to cover their debts and to cover their mortgage and to cover their income if anything happened to them simply isn't there, and they're not able to qualify for it. So making sure that you, on a guaranteed basis, have your family protected is a big deal. Utilizing it for business reserves. I'm an entrepreneur. I love entrepreneurs. I love working with business owners. Having access to business reserves, having a buffer. I was reading an article going back to 2008, and in the Great Recession, right? Which I think we're coming into a very similar time. But going back to 2008 and the Great Recession, 74% of businesses that failed were actually profitable businesses as a whole, but it was just they didn't manage their cash flow properly. And because of the fact that these businesses had downturns in their cash flow for short periods of time, we're talking 6 months, they didn't have enough cash flow and they didn't have enough reserves to be able to weather that storm. So those profitable businesses otherwise had to be liquidated at pennies on the dollar because they didn't have business reserves. So things are going still relatively well for most businesses. My encouragement, if you're a business owner, start thinking about this. Get as much money put away into business reserves as possible. Use the sunny days to prepare for the rainy days, and I think you'll be well benefited from that. Utilizing it as key person insurance. This is a really important thing. We call this golden handcuffs. We call this a lot of different things, but if you have, once again, you're a business owner, utilizing it while you're working. If you're an entrepreneur, this is a way that you can utilize it to protect your business interests, to protect your business partners. It's a way that if you own a business and you have key employees that are vital to your business, to insulate the cash flow of that business and protect it is to ensuring key people that work for you. That way, if anything happens to them, it doesn't disrupt your cash flow. It protects the health and the longevity of the business. Plus, you can utilize a policy as what we would call golden handcuffs because it comes with benefits of the cash value, right? And you can utilize those benefits with a vesting schedule to make sure that really talented people that you would want to hire don't leave you preemptively for the competition. And if they do, that money just kind of becomes yours, and that's good. Now, living benefits, this is a big one. It's not as often that this happens when you are in your younger years and have a family, but living benefits, if you become chronically ill, if you become critical care, need critical care, or if you become terminally diagnosed with something, you have access to your death benefit while you're alive for alternative medical treatments or for whatever you want, whatever you deem appropriate for you. And so I'm going to go over here now and get into retirement, post-retirement, because it's a really important thing. We start with this because it's obviously becomes more applicable as we get into retirement, right? So as we get into these retirement years, that's a big deal. We start talking about the fact that it's inevitable that we're going to have some health challenges in retirement if we live long enough. So having access to this benefit inside of a whole life policy is huge. And that is a benefit that you're not going to get with term insurance. When that's gone, then you have, if you don't have these living benefits in your whole life policy, then you have to spend money on other things like disability insurance, even more disability insurance. I wouldn't say that you should replace disability insurance altogether or long-term care necessarily altogether if you were able to plan long enough, long enough ago. But the bottom line is most people didn't. And so maybe as you're reaching retirement and you're thinking to yourself, wow, long-term care now, I'm retiring in 5-6 years. Long-term care is really expensive. I don't think I can afford it. Disability insurance is not going to get me anywhere as I hit my retirement years. So what can I do to help prepare? Well, having these living benefits, if you're kind of hitting that straddle era where you're kind of 10 years or so away from retirement, this can be a great way to help you accomplish that by utilizing these ABRs. It can solve many needs for you. Utilizing life insurance as a volatility buffer. I talk about this one all the time. It's one of my favorite topics to talk about. That markets, here, I'm going to just come over here real quick. Markets go all over the map, right? So I'm just going to say, let's say you started and your account value is here. And if you start and the market goes up and you're taking income and income and income and income every year and the market's going up, then you're good. But there's a thing called sequence of return risk, right? So what happens if like it's 2008 or 2020 in your first year of retirement, and the first year you're retiring, you're having to take income and the market's going down. So you have to liquidate negatively performing assets. That's the worst thing that you could possibly do, right? Is to liquidate negatively performing assets. And so what we do is we have whole life becomes a volatility buffer. So if you have this going into retirement and the market's not going up, instead it's going down, well, instead of liquidating negatively performing assets at this point in time, you're going to use whole life insurance for your income in down years. That way it can recover and you only take income out of it while it's performing well. That helps you ultimately eliminate a lot of the longevity risk and the volatility risks and all the things that go along with that. And that is a really powerful strategy that honestly, you need to have a guaranteed liquid accessible account that can play that role for you in retirement. Otherwise, you're going to have problems. There's no way around it. So the next thing is tax-free wealth transfer. Let's face it, it's death benefit, right? The life insurance component of the whole life policy is going to be passed to the next generation on a tax-free basis. That's important to understand. Most accounts are going to have tax ramifications. Wealthy people understand that they don't want term insurance, they want whole life insurance because they want this to be there on a guaranteed basis when they die, because they want to make sure the government gets as little of their money as possible and they get tax benefits, and the money, more of their money goes to their heirs than the government, and that's what having this is all about. Ultimately, when you have a whole life policy, it helps reduce the longevity risk. Longevity risk, as I said, is the greatest risk of all in retirement, because the longer you live, the more chances you're going to have health risks. The longer you live, the more chances you're going to have market cycles, ups and downs, ups and downs. And so you're going to see these downs several times in retirement, right? So you know that the more chances, if you live for 30 years in retirement, you're probably going to see 3 times where it's down. So the need for that volatility buffer is even more important. The longer you live, the more important this volatility buffer is, right? The longer you live, the more important the living benefits are, because the more likely it is that you're going to get sick. The tax-free benefit is going to be there no matter what. But at the end of the day, whole life insurance will be there with you at every phase of your life. It'll help you as you're trying to build wealth. It'll be an emergency fund. It'll be an opportunity fund. You can leverage it to invest in things like real estate and other cash flow assets. You can use it in retirement, and it will help you get living benefits. It'll give you the tax-free advantages. It'll give you the volatility buffer. It helps like flatten out the risk, so to speak, in everything that you have going on. And so my encouragement to you is, if you haven't thought about what a whole life policy could look like for you as a holistic perspective in your financial plan, right? Then I would encourage you to really contemplate it, really take a look at really kind of decoding, do you have enough safe money, or are you super exposed to risk? Especially in a time like today, where we're seeing uncertainty in the banking institutions, that we're seeing uncertainty in the world in general, political risk, inflation risk, taxation risk, the debt risk in this country, it's crazy. And so you need to make sure that you put your money in a place, and you have some money at least allocated in a place that you have guarantees that will provide all the benefits that we just talked about. So if you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. If you have any questions at all, comment in the comment section below. I do my best to engage with every single comment personally. It is me who is responding to all the YouTube comments. I don't give that to anybody else. I take that on very seriously. So hopefully you found this video valuable. If you did, please share it with people. Be honored to have you share it and like it and get it out there. The YouTube algorithm loves it when you do that. So until next time, have a blessed, inspirational day. We'll talk soon. See ya.